Hey, this is Ryan from the Option Income Advisor, and this is the trade of the day for August 24th, 2021. And so today we're going to talk about Wynn Resorts or Wynn Casinos. Admittedly, this is one of our largest losers this year, but it's been hit by a double whammy situation where you have a COVID slowdown, and then you have Chinese crackdown, regulatory crackdowns, which really any stock that has exposure to China has really been hit hard, and I think they've been vastly oversold. So I'm going to talk to you today why I think it's a great opportunity for a new investor that's not in it. I think this stock probably has 20 to 30% upside over the next 3 months. I mean, I'm talking short term here because I really think this is a coiled spring situation. I mean, you saw, if you're following these stocks, Alibaba is one of the largest Chinese stocks out there, most widely held, among different ETFs and things. And Alibaba really felt like it bottomed out yesterday. It sold off initially. The buyers started coming in, and you could just see that coiled spring was kind of ready to bounce. And so I think you're going to see that kind of across the board here in the short term. So this is something you probably want to react on soon. So again, admittedly, this has been one of our largest losers the past couple of months because of I think this double whammy situation that they're facing. But it's also a good opportunity to add to your position. Again, this stock was up 5% yesterday. So I think it's sometimes you want to wait for that bottoming out process before you add to your position, so you're not kind of catching a falling knife. But I think this is definitely one of those times when you'd want to add to your position. So we are adding to our position, and I'll kind of show you how we're gonna do that through cash secured puts. And I believe that again, this one has some real significant upside. So I'm going to walk you through, because there's a lot of kind of qualitative things out there with this stock. We'll look at the chart, but I'm going to walk you just through some news headlines that I think really should get this stock moving kind of in the right way. So let me first start just by looking at some of the news articles and research that I've been looking at. And so we've got, if you can see here, so this is from Reuters. This was just yesterday. So there was no new COVID cases in China reported yesterday. I mean, do we 100% believe that? I don't know, but again, this is what they're reporting, and I think that that's just important, just as we're worried about the Delta variant maybe peaking and getting to a point to where there's going to be more activity there. I think is very important, certainly for a stock like Wynn Casinos. So I think that's a big deal. Macau had shut down for actually two weeks, and so they just reopened a few weeks ago. And so what you want to see is this gross gaming revenue kind of on a weekly basis kind of tick up, and you can see right here we've got for the 7 days through basically last Sunday, gross gaming revenue was up 55% because they eased the travel restriction. So I think that's very important that you've got a situation here now where they're starting to allow traffic back in there, and you can certainly see the uptick happening. So that's what we want to see right after you have kind of a shutdown. And the last thing China wants to do is to shut down the casinos, and I think what they've done is they've allowed customers from mainland China to come in, but not really from outside of that. So there's still so much traffic and upside, because we saw what had happened with Las Vegas. So Las Vegas, Wynn just reported a few weeks ago, and actually had a very, very positive report. And so you saw revenues in Vegas that were pretty close to pre-pandemic levels in traffic. And so I think you've kind of seen that in the U.S. where, people are more willing to, go out and go to the casinos. I think you're going to see that probably even in a more drastic situation in China, because I think it's been locked down for so long. When traffic really comes back to Macau, I just think it's going to be unbelievable. And just the headlines alone, I mean, you're going to see just some unbelievable headlines as far as traffic and revenue and like this gross gaming revenue. You're going to see those go through the roof, and you're going to see all this money probably flood back into the casino stock. So I mean, I may be, when I say 20 to 30% upside, I may be underestimating that, to be quite honest. A few other things that are going on with Wynn in particular. So again, COVID has just hurt traffic in general, and I think we can all wrap our head around that. The Chinese regulatory kind of issue, I think, is a little different, because I don't think anyone knows really what they're thinking. But I can pinpoint a few things that kind of make you feel, a little bit better. And one of the other things that are out there with these Macau casino operators is there's a license renewal process, or there's 6 operators that hold what they call concessions. So the operators are called concessionaires over there, and so all of their licenses are up for renewal in June of 2022, and they've known this. I think they've been in ongoing talks just about extension. I think the problem that China's having right now is that they don't want to extend when revenues are depressed, right? Because they're not going to get as, the bids aren't going to be as high, right? And look, everyone expects, most of these, because there's only 6 license holders, and Wynn is one of them. They expect all of them to extend and renew. I mean, they've been there forever. And the last thing I think, China wants, as you're getting, people wanting to come back and really trying to drive, traffic eventually to Macau, is that you don't want a turnover in your big casino operators. You don't want one of the big casinos, sitting dormant because it had changed, ownerships, right? So that's the last thing they want. And so that they all expect. So this is the Melco CEO. So Melco is one of the license holders there. He believes that they're gonna do an extension, and they need to do an extension, right? And so instead of going out and having a bidding process, they're actually going to have an extension for all of these license holders, which again I think will be probably a huge pop to the stock, because this is just something that's been overhanging because they are up for renewal next year. And so I think if we can they're talking about almost like a 3-year extension on these. So I think if you get that 3-year, even if you get a 1-year extension, to be honest with you, I think it'll be a huge upside for this stock. Again, here's Morgan Stanley saying they expect to extend the concessions. And then here's an article. Again, this was the Melco CEO talking specifically about the China crackdown. And if you've been following this at all, it's really been around companies that have sensitive consumer data. And so I think one thing you can point to with the casinos is that the casinos have been operating for much, much longer than most of these newer, kind of, again, education or tech industry focused companies. So I'll kind of show you this quote that he's saying here. Right, so he believes that the casino operators, because they've been working with China for so long, and they kind of understand all the hot buttons, and quite frankly have been put, that they've had regulatory discussions with them over the years. He's saying I think this is very, very different from the education industry and the tech industry that's being cracked down on, and these are these concessionaires are true partners, for Macau and for China, and I just don't think they want to upset the apple cart right now in any way as they try to drive revenue back, because this last sentence here in this article I think just drives this home as well. So Macau gets 80% of its revenue from the casinos there, right? And to put this in perspective, Macau's revenue is 3 times that of the entire Las Vegas Strip. So, Macau is as big revenue-wise as 3 Las Vegas Strips. So it's significant. It's the largest, casino destination in the world. And so this is kind of a very important, I think, situation for China to make sure they get it right, and it employs 1/4 of all the employees that go over there and are in that region, right? And so, again, this CEO is saying that the gaming sell-off may be over time, so that just kind of reinforces our kind of thesis here that it's a good company. It kind of fits our reopening. Kind of cyclical, positions. We try to position our portfolio where we've got exposure to a lot of these cyclical reopening names, and then also some growth tech and some dividend stocks. So we kind of have a balance, in our cash good portfolio, and this one certainly kind of fits that bill. It's a company that absolutely should exist. Again, I think it's just been hit by a double whammy. And, again, I think it's a great situation to get in it if you are not currently in it, and it's a great time to, I think, add to your position if you are in it. And the last thing I will show you is this is one of the growth kind of exciting areas as well. So aside from the fact that I think this Macau situation is just going to be a huge coiled spring for them. They've got, if you've been following just casinos in the sports betting world, this is the new huge growth area. With the casinos is the online sports gaming and betting space. And so, Wynn just recently, within the last year, kind of launched their app, the Wynn Bet. And so they've got a new kind of segment within their business called Wynn Interactive. And so they've got some, UK apps, and then they've got the Wynn Bet, which is the US-based app. And so they're actually going to spin off this segment. And if you think about the total market cap of Wynn is about 10 to 11 billion. Well, this segment, this iGaming segment, is valued at around 3.2 billion right now. So they're going to spin this off. They're still going to own 58%. They're going to have a 58% controlling interest in it. But this is a significant growth area for the business. It'll help them, diversify their revenues, I think, away from Macau. So right now, China represents about 75%, or it did represent pre-pandemic 75% of the revenues for Wynn. And so I think this is just a huge, again, just upside. This is probably more in the future over the next 2-3 years. But this is just a phenomenal growth area for Wynn and for all these casino companies really. So that's the kind of news I wanted to show you. So I think there's, again, just significant reasons to believe that maybe we are kind of having this bottoming out process with some of these casino stocks, especially the ones with exposure to China. So that's why I feel comfortable. So let's look at the stock profile here. So you can see, again, I was talking about wanting to, some confirmation that, maybe we've hit some levels of support. So, again, Alibaba, I believe, just looking at that the way it traded yesterday, it really feels like that stock bottomed out. Wynn was up 5% yesterday. It dipped down in kind of like the 87, 88 range. So I really do believe that this stock is kind of ready to move now. So, as opposed to, a lot of cash secured puts where maybe you want to sell, into weakness, because this one has been hit so hard recently. Again, it's kind of getting that confirmation that, hey, the selling, I think pressure is over, and there's kind of real buyers, there now to propel the stock, a little bit higher. So our strike zone we're looking at right now is 76 to 86. So we actually own the stock at, our cost base is about 113. So obviously we're down quite a bit there. So this is a good, instead of selling covered calls on a stock that's dropped that much, and we've kind of talked about this, right? When you get assigned on a stock through a cash secured put, sometimes it goes quite a bit below, it's rare, but sometimes it goes quite a bit below the strike price. And it's usually a situation like this where there's, some company specific or industry reason why, a stock will dip that low. And so you got to take a step back and try to understand the reasoning behind it. And that, that's obviously what we've been doing over the last, few weeks, is really trying to wrap our head around this, Chinese regulatory issue, and really looking for signs of stability. And so this is a time where you can sell additional cash secured puts, right, to generate income instead of selling a covered call, because what we want this upside, right? So we want to own this stock probably for the next few months, depending on how quickly it trades up. But if we get a pop in this stock up to even close to our current cost basis, we may consider selling a covered call. But right now we want to capture this upside that I think is available, with this stock over the short term, and then kind of juice our income and kind of help reduce our cost basis of our current position by selling additional cash secured puts with a margin of safety below, the current price. And so that's just a way that, again, you can allow yourself to hold a position, right? We always say selling cash secured or selling covered calls is kind of a, something you need to think about from a just upside perspective, right? Because anytime you sell a covered call, you're giving up your upside. And if it's a stock you truly think has short-term upside, sometimes the best route is, again, just to hold the stock and allow yourself to get some of that upside. So the thought here, though, is that if we do sell cash secured put and things do get a little worse over the short term, I don't expect they will, just kind of given what I've seen recently. And I honestly think that that the Delta variant in the U.S. is kind of peaking, or we're over the hump, kind of on the scare on that side too. So I think that's another kind of positive with some of these stocks as well. So, but the thought is if we do end up getting filled on another cash secured put, for example, we're going to be able to obviously reduce our cost basis by dollar cost averaging quite a bit. If we can get something in the 80 level, for example, it's going to reduce our cost basis quite a bit. But again, I don't really expect that to happen. So we're really just using these additional cash secured puts as just additional income and a way to reduce our cost basis. So again, it's been a stock that's it's not crazy volatile, but it certainly has had some significant volatility, kind of in the 42% range. The actual historical volatility is right around 50%. But it does have a pullback indicator of 9. It is off 36% from its high. Again, it's been a stock that's just gotten crushed recently, and we'll look at the chart here in a second. And our required minimum margin of safety right now is about 7.7%. So let's look at the chart, and then we'll get into again, some of the cash secured puts that we can sell. Let's see here. Oh yeah, let me just pull this chart up. Okay, so here's the chart going back to, so you can kind of see the pandemic low here. So, this stock hit a low about $45, which is crazy, right? Started coming back, immediately right after the initial pandemic kind of scare, and then just really traded in a range for a while. Broke out, kind of at a failed breakout, if you will. This is kind of our breakout level there. Kind of had a failed breakout, early this year. This is when we kind of had the tech scare as interest rates were going up. We had some renewed, worry about COVID kind of early in the year, so it kind of traded off. But then we actually had a real breakout. So the real breakout was right around kind of 116 area. Had some nice follow through. Again, it was kind of trading in a new range up here. But here's where the China crackdown started happening. And so that really, again, this is a play really on the kind of oversold nature of all this China crackdown stuff. And so what we saw yesterday, again, this was kind of the level of support kind of in this 87, 88 range. And you can see we definitely bounced and held there. Again, that's why I liked seeing, the big jump yesterday. So we're up 5%, but I still think it's a great time to sell a cash secured put, kind of just given this recent strength here. So I like that it bounced off there. That's a level, we're kind of looking at. That's kind of the high end of our strike zone anyway. So that, again, makes me feel pretty confident. So anywhere below this kind of 86, 87 level will be, in our strike zone. So again, that's an area I would certainly, consider adding to our position. And again, it's this channel here between 70 and call it 85, 86 is going to be extremely, just extremely valuable from a support standpoint. I don't think we're going to get down there, to be honest with you. I think this top level should probably hold, and I just believe that, again, I think we're in a coiled spring situation where I don't think there's any reason why this stock can't go right back up to where it was kind of pre kind of China crackdown scares. Because again, I think as soon as you start seeing these numbers change in Macau, these stocks, this stock could be up 50%. To be honest, in a short period of time. It's been waiting for confirmation. It's been waiting for the dust to settle, and I really think that's going to be the big catalyst that's going to make it trade higher. But for the short term, as long as the China regulatory crackdowns, as long as some of these other Chinese stocks are getting buying support in the market, I think this stock will continue to trend a little bit higher. And so just from a EPS standpoint, I would certainly expect this company to get back to pre-pandemic levels from an earnings standpoint. And again, this doesn't even include win bet in the iGaming segment. So at its peak in 2017, prior to the pandemic, this was producing about $7 of earnings per share, and just obviously that. If you got back to that level, I mean, this stock is trading at 12 or 13 times, kind of that peak level, and I think we can get there. They're projecting, I think, to get up to about right around $5 or $5.50 a share in 2023. 2023. So, I do believe that the trajectory is going to be in place here. And I think because 2023, I think you're going to see just a significant amount of gaming revenue or iGaming revenue as well. And so I think that this is probably setting the bar pretty low. I think by 2023, certainly 2024, we're going to get back up to these levels, which I think puts $150, $200 per share kind of in the long-term horizon, right? So let's look at the cash secured puts. So we're still writing puts for September, and so Here's what we're looking at here. And because this is I do truly feel like that $88 level is probably going to hold, to be honest with you, that we kind of bounced off yesterday. But just because we already own a position, and if you want to be conservative on getting in to a new position, I would kind of stick to our guns here. Even though this is an 11 delta, I would stick to our guns for that base strategy and say, if we can get 1% on average per month, with this additional trade, it gives us an additional 14% margin of safety. There's no earnings risk currently with this particular option, and so I think that risk reward is just phenomenal, right? You get that 1%. It's an 11 delta. I think this makes a lot of sense just for our base strategy. And again, because we already own a position, there's no reason to get too aggressive, from this perspective to add to our position. Because again, we're wanting to hold the stock to get this near-term upside. And if we can juice our income just a little bit, through an additional cash secured put, we will. I think this 75 is really good for the conservative side, a little over 0.5%, but almost 20% margin of safety. And then if you wanted to get pretty aggressive on this, you could either do the 85 or the 87.5. Again, this is kind of the level it held yesterday. So if you want to get pretty aggressive there, you could do that. That 2.7%, still a delta under 30. So I think that's pretty good for the aggressive side. Again, you're betting that low from yesterday is going to hold, but I think it's reasonable, kind of given what we just talked about and some of the upside catalysts we have here. So, again, this is real life kind of trading, right? You have situations where you get filled on a stock. You get assigned a stock through a put, and it's one that goes significantly lower. But this it's no different from you holding a basket of stocks, right, for the long term, and one just not performing well, over the short term, right? You do the same thing with a cash secured put portfolio. Anytime you're faced with that situation, you take a step back. You say, why is this happening to this stock? Is there a reason to hold it longer term? Is there upside catalyst? What are the reasons why it's been trading down? And as long as you can pinpoint those and have a thesis as to why, you think the stock's going to trade higher, there's nothing wrong with holding a stock, in the triple income wheel portfolio for several months to catch the upside. And like I said, there's ways to, without selling a covered call, to juice your income, a little bit as you're waiting. And so that's kind of the analysis here. But I think as a new trade, this works extremely well. I love the risk reward of this as a new trade. And again, I really like the short term and medium term upside for the stock. So that's our trade. Let me know if you have any questions. Take care.